So guys, welcome back to our channel. And today we are with the co-founder of Covalent, Ganesh, here with us to share with us his insights. Welcome. So Ganesh, could you briefly introduce with our audience that yourself, your background, and the Covalent project?
Absolutely. First off, Prince, a real big pleasure in being here and talking to your community. So first off, a little bit about myself. I'm Ganesh Swami. I'm one of the co-founders of Covalent, which is a data infrastructure protocol. And myself, I started my career as a physicist working on cancer drugs and then pivoting out of pharmaceuticals into data infrastructure. So for about a decade, I've been building databases and data infrastructure before starting Covalent. And Covalent is a project that's been, it's a critical part of the industry, the Web3 data industry. We've been around for 5 years now and have thousands of customers. And we partner with hundreds of blockchains, over 200 blockchains, and provide data services that is critical for the Web3 industry.
So could you tell us more about the business model of Covalent and how does it achieve profitability? I think the audience will be really interested.
Absolutely. So just to caveat here that Covalent is a decentralized protocol, which means that yes, you have costs and you have expenses and you have revenue and you have profitability, but there's an underlying tokenized business model on top. So that is extremely important to understand. So it's not a traditional company. And fundamentally, the business model works this way. So the protocol goes and indexes all of these different blockchains and then offers that blockchain data for access by applications. So it's mostly a developer API. So it's a developer product. It's not a retail product. And the developers, they pay per query or pay per API call to access this on-chain data, the blockchain data. So this payment goes into the protocol and is then distributed to the operators, the distributed operators, the decentralized network for its services. So that is fundamentally how the Covalent network business model works. So this whole thing becomes a flywheel. So essentially, more data that you come from blockchains, more use cases are unlocked. More use cases means more developers come in. More developers means more applications. More applications means more data. And therefore, more data means more blockchains. And so it's just a flywheel that keeps expanding. So we've just, doubled down on this over the last couple of years. We started in 2020 with just one blockchain, which is Ethereum. Now we have over 200 blockchains. And I think this will reach 1,000 blockchains in the next couple of years. I have no doubt. And it's basically the business model there.
Yeah, that's amazing. I mean, when I check out your website, so I noticed that the narrative, the Ethereum Wayback machine. So what is the EWM, and why you emphasis on this narrative?
It's a great question. So one of the fundamental misunderstandings of blockchains is that blockchains are more like billboards and not like databases. So what does this mean exactly? So if you have a billboard, let's say an advertisement billboard, what you do is you post some kind of advertisement there for maybe a couple of days, maybe a week, maybe 2 weeks. And then after that, you switch it over to the next advertisement. There is no historical record. There's no record keeping, none of this archival information on that information on the billboard. So blockchains are also like billboards, which means you post your transaction data to a blockchain. And then after the challenge window, which may be 2 weeks, for example, if it's an optimistic roll up, then what happens is after 2 weeks, the data has been validated. And therefore, there is no need to keep the transaction data. So the transaction data is deleted. So basically, it's only kept for 2 weeks. And you can see this is happening in a variety of reasons, a variety of like facets. So one example is, let's say, if you use a data availability layer like Celestia. Celestia is a very popular DA layer. So in the DA layer, what you do is you post your data for 2 weeks, and then after 2 weeks, the data is deleted because it's very expensive to keep that data around. If you look the same thing on Ethereum with the Dekun upgrade, which is the most recent hard fork, happened a few months ago, there it introduced the blob storage. So you can post your transaction data to blobs. But blobs, after 4,000 epochs, which is roughly 18 days, the blobs are deleted. So now the question is that how do I get transaction data beyond the challenge window after it's been deleted? And in our opinion, this is an extremely underexplored and overlooked problem in the space, because the whole point of blockchains is to have this immutable ledger. So a ledger that is secure, it can never be modified, which is great. So you have this immutable ledger, but 1 year from now, if I want to go get data from this immutable ledger, it's just not available. So that is a fundamental crux of the problem we're looking to solve. So here we've introduced a mechanism to ensure that data is available. So transaction data is available on the blockchain for the long term, beyond the challenge window, beyond the 2 weeks or whatever the blockchain properties are. So the Ethereum Wayback machine is similar to the Internet Wayback machine. For your listeners who remember archive.org, you can go to archive.org and you can put any website you put in there, and it can tell you the snapshot of this website like a year ago, 2 years ago, 5 years ago, 10 years ago. So it just has this whole historical record. So that's the Internet Wayback machine. And just like that, we have introduced the Ethereum Wayback machine, which is this cryptographic mechanism to have all historical data of blockchain transaction data for all eternity. Because this is not how a blockchain really works. It doesn't keep data. So that is a fundamental problem statement and the solution that we have with the Ethereum Wayback machine.
Yeah, I think you just explained why this mechanism is so important for the ecosystem. So my next question is, what do you think this narrative is bringing what impact or changes it's gonna bring to the Ethereum ecosystem?
So fundamentally, I think blockchains, especially Ethereum, is going through a massive leveling up in scalability. So if you look over the last, let's say, 10 years that Ethereum has been around, the blocks have been becoming bigger and fatter. The block times have changed, more opcodes. So basically scalability has become, more and more and more. And so one of the last final pieces is just the congestion with data on the Ethereum main chain. And this is why the DA layer was introduced. Now, when you use a DA layer, so Celestia is not the only DA layer. There's EigenDA, there's Avail, Near has another data availability layer, lots of DA layers. Essentially what happens is that basically Ethereum itself is supercharged. So what does that mean? If Ethereum is supercharged, then more users, more applications, more transactions can be processed. And eventually we can hit a scale where the bulk of the world's transaction happens on chain. So today, if you look in the crypto space, most of the trades, the crypto trades, still happen on centralized exchanges. And the question you have to ask is that crypto has been around for such a long time, over 10 years. Why are blockchains not the default for crypto trading, right? Why do you need Binance and why do you need Coinbase? Why is it not all happening on chain? And the problem is blockchains are not scalable. So there's an UX issue here. So with the DA layer, this dramatically increases the scale of Ethereum. And so that is why this is such an important narrative for this cycle, because this eventually just scales Ethereum and it becomes basically, if you look at any public network out there, like Visa, for example, Visa processes 50,000 transactions per second, and Ethereum is not at that level yet. So with all of these technologies, they provide a compounding growth effort. So it'll just improve Ethereum and make it world class. So that's really that's why this is such an important narrative for this cycle.
Yeah, I also think this track is relatively actually very new to also to our audience. So, what about the your competitors? Let's talk about some of your competitors, and what do you think the advantage that the Covalent have to compete in the market?
So I think it's quite difficult to talk about one specific competitor because we are more of a horizontal kind of solution where we have the Gold Rush API, we have the Gold Rush Block Explorer, we have increment like dashboarding tools, and then we have the core infrastructure. So let me pick on one specific competitor that's also been around for a couple of years, and this is known as the Graph. So the
Yeah,
Graph is another very big indexer. I think we've been in the market for a couple of years now, and the key difference between Covalent and the Graph is that in the Graph you have to write the subgraphs. So it's a lot more work to get the data. In the Covalent system, all the data is automatically available. So it's a no code kind of solution. So you don't need to like write any code to access the data. And the second thing is from a traction perspective, Covalent has done a lot in terms of the competitive market positioning. So what does that mean? In terms of the number of blockchains that are supported, the Graph, the last time I checked, was about 35 to 40 blockchains. Covalent has already crossed 220 blockchains. So substantially more data on Covalent compared to the Graph. If you look at the revenue, the on-chain protocol revenue, Covalent is already 5 times more revenue compared to the Graph. So that is an important kind of metric that shows you real customers with real revenue use Covalent and not the Graph. And in terms of like AI use cases, in terms of long-term data availability, in terms of the new narratives, Covalent keeps reinventing itself. I'm not sure how the Graph has played out in the AI space. I think there's other competitors that do the AI stuff there. So yeah, I would say broadly that is really what the differentiating factors are. If you look today in the DA space itself, Covalent has introduced something called long-term DA as opposed to short-term DA. So it's not really a replacement it's not really a competitor to like Celestia or EigenDA or Avail. It's more a complement or it's adjacent. So it's not directly competing with those guys because Covalent's EWM on long-term DA holds
what's
onto data.
long-term DA? So you share with us more about the long-term DA, this concept.
So this is going back to the Ethereum Wayback machine, right? So blockchains are billboards; they're not databases. So what that means is the data is only available for the challenge window, which could be 2 weeks. So we have gone out there and introduced basically invented this concept called long-term DA. This term does not exist outside of Covalent because we were talking to the major DA layers like EigenDA and EigenLayer and Celestia. I did a panel on this at ETH Denver earlier this year, and there needs to be a solution out there to make this data available post the challenge window. That is why this term is called long-term DA, and the Ethereum Wayback machine is an implementation of this concept. So I've already explained, the challenge window and why it's so important. But this long-term DA, so data availability is short-term and long-term. Short-term is for the challenge window, which is 2 weeks. Long-term is beyond the challenge window, which is for forever.
Okay, so you just mentioned the AI models that your project is using, because I think the decentralized AI models actually pretty hot narratives. I feel like in this cycle too. So could you share with us the what areas does Covalent use AI technologies?
Absolutely. So again, this is an overlooked space in decentralized AI. So when people think about decentralized AI, they usually talk about decentralized training, decentralized inference. So if you look at all of the major projects out there, like Akash, for example, or IONET, GPU Cloud, these are all decentralized training or decentralized inference. But one of the missing pieces, which is what Covalent is solving, is decentralized data, because you can have all of the training and the inference and all this computation, but if you cannot trust the data that you're feeding into these training models, then your whole model itself is corrupted. So one of the biggest challenges with AI today, it doesn't matter if it's like centralized or decentralized, is that the data itself can be biased, right? So what does that mean? So people can manipulate the data for really evil and bad purposes. Like, people's opinion is not the problem, right? Everyone should have an opinion, but if you twist the facts, with fake facts, then you can mislead the model training. So that is the key problem that Covalent is solving today. So in the decentralized, we would partner with the decentralized training and the decentralized inference engines and provide decentralized data. Now, Covalent really has the stronghold when it comes to decentralized data, because Covalent has the largest structured database in the world, right? This is essentially the indexer we've been building over the last 5 years. So this is 225 plus blockchains, all of the transactions that is cleaned, normalized, and cryptographically secure. So it's a decentralized network that ensures that there is no accidental or intentional manipulation of data. So this whole decentralized data pipeline is essentially very important. So I think, at some point when people start to use these AI models, they're going to ask, where's the data from? Can I trust this data? You're giving me all these answers, but what did you feed into this data, right? Did the data come from, some centralized solution, which could have been manipulated by some political party or some, media for biases and just to twist the facts? Or did it come from a truly decentralized database and a data so that, there is no accidental biases and manipulation? So that is a key problem that we're trying to solve with the AI landscape.
Okay. So I'm no AI expert because I don't have any technology background, but I think I know that like GPT, when they training AI, and they need this phrase of the relabeling, and it's manually. It's people to refine the tone when AI answers questions. So I don't know if that is the similar process, or we don't need any manual like intervention.
So that is exactly, see, you're not technical, but you understand the problem statement. So, Prince, you just hit the nail on its head. So this team at OpenAI is manipulating the facts so that the training models is not racist, or there's no biases, or
Yes.
it's not having these, like, according to OpenAI's opinion, that it's not wrong. But why is OpenAI's opinion the opinion you have to care about, right? What if there's another company that actually trains this only to be a racist, language model? What if it trains to provide wrong medical facts? So this is a term that is known as hallucination in AI models, right? It makes up facts. And so what if it makes up facts? If it gives you the wrong diagnosis, or it tells you, okay, I use this, like, give me some music, and it can generate this music, but it is using copyrighted information, right? It's stealing music from other people without giving the right kind of credit or citation back to that. Like, what if that output itself, like, there's actually actual lawsuits happening right now where the New York Times is telling OpenAI, please don't use our data. Things like Getty Images, that has this historical record of all of the old pictures, right? This is like really valuable information. OpenAI just went out and stole all that data and said, yeah, we can just mutate this data, right? So I think these are the questions where decentralized data really comes into play.
Yeah, and also I think myself is very big like supporter of open source ecosystem. So all the centralized AI models, I think that is the biggest problem is manipulate in the future. So I think that is gonna be, especially the big firms like OpenAI, is gonna be a huge risk in the future. So that's what I see.
Absolutely, 100%, 100%. See, I think it's really fun to use these OpenAI models, the ChatGPT and Claude. It's really fun, but you don't really know what is going on behind the scenes, right? Just like you can go eat donuts for lunch and breakfast and dinner, but it's all sugar. It's bad for you. Like it tastes great, but it's bad for you. So it's the same thing. I think, you have to ask what has gone into this language model. Like, is it telling me facts just because it's like fun to hear these facts, or it's like, reaffirming my biases, or is this the actual truth?
Yeah. So let's move on to our next questions. It's about the you guys migrate from the Moonbeam to Ethereum. So why you choose like a Moonbeam like previously, and what makes you change your mind?
Wow, this is such a great question. So you've really done your research. I really appreciate it, Prince.
Of course.
So when we started to build the Covalent network, there were not many options for a scalable settlement layer. There was no optimism. There was no Arbitrum. There's no ZK Sync. There's no Tyco. There's no Scroll. No Ethereum scaling solution was live. The only option was Ethereum mainnet. And so what we decided is back then, Moonbeam was a very compelling option. So this would have been in 2021. Polkadot and that entire Polkadot ecosystem was very promising. And there was a lot of hype. And so we picked Moonbeam as our settlement layer. And the Moonbeam team was excellent to work with and, did really well. Now, there are two challenges with using Moonbeam as a settlement layer. First thing you have to remember is that Covalent token, which is CQT, lives on Ethereum. It's an ERC20 token on Ethereum. So you have to bridge the token across to Moonbeam in order to use the token. So when it comes to actually using the protocol on Moonbeam, the two major issues are there. First is there's a security issue with these bridges because you have to manually bridge the token across. Second is on Moonbeam, you need to use Glimmer as a gas token. So you need to go get a second token. You have to go, okay, maybe Binance has a token, maybe something else has a token. Binance is not available anywhere. So a lot of UX problems there. So going back to the first point, the security issue, we were hit pretty hard. So in 2022, exactly 2 years ago, the Nomad bridge, that is the bridge that Covalent used to bridge CQT, it was hacked. And this was a pretty major hack. This was $200 million hack. $200 million was stolen. And 10% of CQT supply that was bridged across was stolen. And so this is a major setback for the Covalent community. Mm-hmm. And, it just crashed the price because the hackers, they went and dumped the token. It was a massive mess. It was just really bad. Yes. And so after that, we had to like figure out what's going on. And then we decided, okay, you know what? Our gut feel is that bridges are not good, right? Even today, bridges are not solid. There's a lot of like gotchas. It's just not, that just doesn't make sense. And so that coupled with the UX issues was the reason we decided, okay, let's move off Moonbeam. Let's stick to the Ethereum ecosystem. And by then there's lots of other options. There's like, Optimism was ready. The OP stack was ready. There was Arbitrum, lots of other options by then, right? So we did this migration in late April, so about 3 months ago. And the results is phenomenal. So the staking supply now is 22%. So 22% of the circulating supply is now staked against the Covalent protocol. So this is people, token holders securing the network. The delegation space, so we've increased it to 32 operators because it's a lot easier to onboard these operators, and they have the space is 100% full. So every time you open up more space, all the space gets pulled. That just shows you so easy it is to use this protocol because you don't have to bridge your token. Then you don't have to, get Glimmer on the other side and so on. And the other thing is that after that bridge hack, Moonbeam and Polkadot itself kind of lost its relevance. One of the unfortunate things here is that about $40 million of stables, USDC, was bridged across from Ethereum to Moonbeam, and all of that got stolen. So essentially, the entire ecosystem fund on Moonbeam was just stolen, and so they didn't have any resources to fund projects on Moonbeam. And yeah, Polkadot basically just fizzled out. So in hindsight, this is the right choice to make. But because this is already an operating network, it took us a little bit of engineering work to move the stuff. But we finally made that happen in April, and the results are phenomenal. And the amount of operators who want to join Covalent now is through the roof. So sometimes it tells you that if you join the right family, you are shown a lot of love, a lot of care. But in Polkadot, we were never given any grants. We were never, supported really. And it was just that. And we were the number one protocol on Moonbeam. Like if you look at the gas guzzlers on Moonbeam, it's Covalent, right? But even that, it's just not enough. So yeah, so that's the background story with Moonbeam. Thankfully, the whole Moonbeam connection is now cut off. So if you have CKT on Ethereum, you can just click 2 clicks, and then you can stake your CKT. So it's super simple. You don't need to go through all these all these hoops. And so definitely the traction and the metrics support how easy it is to use.
Yeah, understand. So I think all my audience are waiting for this interesting question. So about Arthur Hayes. So how do you persuade him to join the team? I mean, can you just share with us some interesting stories back on this, or what does he brings to the team?
Absolutely. So we met Arthur at Token 2049 in September last year, and he decided to join in April of this year. So it took about 6 months to convince him to join Covalent. And a couple of things are very interesting here. Arthur, you guys know, and the audience might know, he's the co-founder of BitMEX.
Yes.
He's the inventor of crypto like perps, right? Crypto perps is a product that does not exist in traditional finance. So he's a very forward thinker. Second thing about Arthur is that he does these 1 hour, 2 hour, 3 hour talks on YouTube on macroeconomics. So he talks a lot. So this is like really exciting stuff that he says. So he's actually very well-rounded. So he's not just a influencer, but he's also a company operator. He's an innovator, a technologist. Lots of features here. So getting someone like him interested in Covalent was pretty tough. Anyway, so we convinced him. And then finally he said, okay, he had a couple of chats with me. And then he's like, okay, I understand all this stuff. I'm really excited about Ethereum Wayback machine. And his questions were just cut to the chase, right? He asked me, why is Vitalik Buterin, the founder of Ethereum, not talking about long-term DA? Right? What is he missing? Why is he not talking about this? Then he asked, like, okay, what's happening with this AI model? Like, how exactly? Because he's very, very, he's like genuinely curious about all this stuff, right? So then he was convinced that, okay, this is the future. I'm excited to join this thing. Now it's my turn to ask him questions on why he wants to join Covalent. Because I asked him, everything you've done in your career is finance related, right? It's not really infrastructure. All of the other projects you're part of, like Athena and so on, are all financial products. This would be one of the first non-financial infrastructure products you're going to join. What about this are you interested in? Because it's not money, right? You have plenty of money. So you're not doing it for money. You have to do it for something else. So what is that? And so that's when he said, okay, you're not just doing indexing work, right? You're working on a problem that is so important because archival information on blockchains is critical. Like I said, it's an immutable ledger. You need this data. So So no one is talking about this, but it's so critical. And that means there's a untold story here. There's an opportunity here. And, when you work on something so passionately that no one else is talking about, then, in some time, as the world catches up, then you'll be having the most advanced technology. And that's a very interesting place to be, because you don't want to work on the next like L2, right? There's like hundreds of L2s, right? Who cares? You don't want to work on the next, you don't want to work on something that everyone else is working. You want to work on something that no one is working on, but your gut feel, that this is really important. So that was a thing that happened. And so, Arthur Hayes is a unique personality, right? He has his mannerisms and so on. So we did an exclusive launch with the block, and I know WuBlockchain also covered, that announcement, and yeah, it was pretty exciting. So and then we have every 2 weeks we sync up, and then he goes through all kinds of things. Right, he goes through the economics. So we are coming up with this Olympic light client technology. So he walked through the economics there. He talked about Korea expansion. So we have a major focus to the APAC expansion. Arthur and his firm Maelstrom, they're based out of Hong Kong, and so he put us in touch with some of the key members in the Asian community. He was talking about his own experience with BitMEX, how people created their own translation of the BitMEX UI, right? So they created screenshots and then overwrote all the English text with Korean because they really wanted to use the product, but they didn't understand English. So he's talking about all this like crazy stuff. So that's essentially, where the value from Arthur Hayes comes. He also has a major book of business, a pretty massive, deep network. So opening up on basically every 2 weeks, he'll say, "What is your biggest problem?" And then he'll say, "Okay, I can help you in these 5 ways." So it's extremely focused on just working with Covalent and growing Covalent.
Yeah. So I think Arthur is really, really an interesting character, really interesting person. So we also translate and publish his articles like regularly, and our followers really like. I think he's honest. Well, I think what kind of, could you share with us what kind of the suggestions he gives to you? So does he say something like, "Oh, don't do that," or this is bleak. You can't do this. You can't go this direction. So is there any suggestions like this?
I think his value comes from thinking from first principles, right? So sometimes, at Covalent, you make a decision, but you don't really consider if there's an alternate choice that you can make.
Mhm.
Sometimes it's because of a lack of time. Sometimes it's because of lack of like experience that this other option even existed, right? So, like for example, let's say, for example, like you want to get listed on Binance, and it's actually very difficult to get listed on Binance, or you want to get listed on, let's take another example. You want to get listed on Upbit in Korea, but it's actually quite difficult to get listed on Upbit. So what is your path? What is the strategy to get listed on Upbit? So, there we can explore all of the different options. But now, Covalent is a technology company. That means everyone on the team, including myself, we're technologists, right? We're not really like market structure specialists. We don't really understand markets and exchanges and custodians and the requirements and so on. So we need to figure that stuff out, right? So this is where we can provide an alternate viewpoint in terms of how to expand. So that's like just market development, right? The second thing is, another example is back to the token economics, the tokenomics, right? So we have this new staking program that's coming in. Now, the question is that where is the yield coming from, right? How are you going to support this yield? So a portion of this yield comes from the revenue that Covalent, the protocol, makes, right? We have Fidelity, we have Jump, we have Ernst & Young, the Big Four accounting. So thousands of customers who pay actual like money to use a protocol. And so some of that comes from yield. So it's coming from the outside world. But the other yield will come from some kind of inflation. So his question is like, okay, let's do a sensitivity analysis, a scenario planning on what the yield should be that is interesting. Because I think today, if you do less than like 5% interest APY, that's not interesting because Ethereum gives you like 4% APY, and Ethereum itself is a very secure protocol. So it should be more in the 8 to 10% APY for it to be interesting. So let's run through the numbers and figure out how do you tactically understand where this yield is coming from. So that's one example. I already gave the example of the Korean like expansion. And then, so stuff like that. I think that's basically, we've just started working with them. And so far, it's been great working with them because, clearly, like, we've been in the space for a while, and you come up with, you come run into advisors and, KOLs and so on. And you don't really get a lot of pushback from these KOLs.
Yes.
But when someone wants to be a part of your team, but doesn't need your money or your tokens really, because, Arthur is like, he's pretty rich, right? He doesn't need our money. So, but he's like genuinely interested in helping out. I think that relationship changes, right? And so that's why I'm so excited about it. And
Yeah, I do believe that Arthur is a really good advisor. So congratulations. So
thank you.
in the April, let's talk about this year. I feel like this year, April, you guys are so busy, like so many decisions, so many changes. So you announced that you had privately purchased all the CQT tokens held by the FTX bankruptcy trustee. So are there any more details about this can review to our audience about this buyback events? Like, for example, how many tokens were bought back and the buyback prices and things like that, or details like that?
Yeah, absolutely. Let me tell you a story about it. So just some backstory on how we got here. So CQT is one of the tokens that was trading on FTX, the exchange. Alameda was a seed investor, but they've unlocked and so on. But it was on that exchange. When FTX filed for bankruptcy, all of the assets in FTX's balance sheet went through a liquidation process. So there was a trustee that was managing the liquidation process. And, this is like part of the lawsuit and the court case and so on. And finally, I believe Galaxy got hold of that entire basket of assets. I think there was like 150 assets that was trading on FTX. So this is 150 assets, and CKD was one of those assets. And we've been talking to Galaxy and say, hey, let's buy this entire thing back. So specifically, this was, if I remember correctly, about 30 million tokens. So about 3% of the supply was on in this basket. And so we try to talk to Galaxy, made a fair bit because these are unlocked tokens. So generally the norm is unlocked tokens is like 10% discount to spot. That's generally what the market rate is. If it's locked tokens, you can expect 50, 60, 70% discount. But unlocked tokens is generally it's only like 10% discount. And this was, in March, April, the token was trading at 40 cents or something. So this is quite a sizable chunk of money, right? And so we even tried to get to them. And then suddenly they just ghosted us. They just stopped responding to our messages. And then it's okay. That's weird. Like we offered a fair deal, and it actually saves you time. And then what we found is that they sold this entire thing to a private buyer, like a joint venture with another like hedge fund. And then the next thing we found is that this private buyer is starting to dump all of the tokens on the market, literally market dump, like just literally sell on the. So that's for a token like CKT that doesn't have a lot of liquidity, 3% of the supply, it's a lot. So the price basically drove down to about 16 cents from 45 cents, right? And that's kind of like ridiculous, right? It's really unfair to the other token holders. Like this is so stupid. In fact, we offered to buy it at that higher price point. So yeah, I just came back from Dubai that evening. So Sunday evening, I come back from Dubai, and in Dubai that week it was all floods, and Dubai is also a big mess. So I come back on like Sunday evening, and one thing you have to know about a token project is that if your token does well, nobody really tells you anything. But if a token doesn't do well, your entire community will say, oh, the CEO sucks. this is a scammer, this is a rug pull, all that stuff, right? And so my phone was ringing nonstop. What is happening? Because you could see like it's just driving down and down and down and down. And so I looked through my contacts and figured out who's this guy who manages all this thing. And I found out his phone number and I called him and said, "Hey man, what's going on here? This is completely irresponsible. And we're offering to buy this whole thing. Let's do it." Right. And then what I found out is that out of the 150 assets, the only asset they wanted to keep is Solana.
Ooh.
So they were selling all the 149 assets in the market sell. Right. So pretty aggressively. And then the other thing is that this whole basket of asset was worth about 300 million, right? That's the entire like worth here. But they were selling everything else, so it's not just CQT. And then so I talked to them and said, "Hey man, I just want this problem off your hands. It's really bad. It's damaging the project. It's really bad look. Let me to pick this whole thing." And then this guy starts to negotiate with me, and then I'm saying, "Okay, this is really bad. The whole reason why the token is down is because you're selling. And then you're telling me that the price is down because you are the guy who's pushing the price down." So anyways, there's a bunch of stuff. And then finally we bought it. So when we bought it, it's about, I think 1.7% of the supply, 17 million tokens at 13 million tokens at 17 cents.
That's an interesting story. that is that exclusive like stories on our podcast. You didn't tell.
I've never shared this in public, so I think this will be an exclusive for you.
Great, thank you. So
and so I wrote a big Twitter post about this, and it got crazy because a lot of founders don't know. Like I said, a lot of founders are technology people, right? They don't really understand this kind of like financial stuff. And so I wrote this whole blog post with with the guy from Taken, like the movie. And he has this like phone and he says, "I'll come find you. I don't know where you are, but I'll come find you," because his daughter gets kidnapped. So I put that poster just like a meme, and that post went super viral. And then I got so many DMs from other founders because everyone wants to save their project, right? You cannot help this like random person just destroy your project because you work so hard to build your community, build value, tell a story, and then some random guy, he doesn't even care about your project. It just comes through some kind of liquidation. It's a forced selling event, right? And it's so bad. But sometimes as a founder, you have to solve whatever problem. It's not like I knew that this is going to happen and stuff. I just had to like figure it out and then go and hustle.
Yeah, but I do think that is well, let's say that's special about the blockchain because you never know, you never know the risk could come from any speculators, and because they're all like hunters. So I think it
keeps it exciting. Keeps it exciting though.
Very dangerous but exciting game.
Yeah, exactly.
So you guys, your team recently raised like 5 million in the latest funding round. So how will this funding be used? Talk with us more about the market plans and strategies for the APAC market.
So the $5 million round, we're very grateful for these new partners who joined Covalent on this journey. Covalent did not really need the funds because we make money. We're like generate revenues and so on. But it's important to get partners who are values aligned. So in April, I was in Hong Kong and I went to mainland China. I went to Shanghai and Hangzhou. And I spent a lot of time with the community there and understanding like what's what. And then I realized that this is an extremely important market for us to tap into. We hosted some dinners with some community members. I gave a talk at Alibaba's offices in Hangzhou. And so in English, of course, I don't speak any Mandarin. Just want to make that clear. So yeah. And so this is extremely important. So we raised this capital from entirely Asia Pacific focused funds. So this is be Rocktree Capital, CMCC, and so on. And so this is a variety of different aspects that's going to help with expansion. This includes like building KOL communities. This is including increasing liquidity, market makers, exchange listings, and so on. This would include things like translations, things like AMA. We just did another AMA last week with the Chinese community, and so on. So just a lot more engagement in that community. It's just incredible to see how much energy there is in China. There's a community member. I want to name this member. They're called Mint Ventures, and they published a full publication, like a full booklet on Covalent. Like I saw this booklet. I have it in front of me. It's incredible how much work has gone into this. And so that is the exact purpose of these funds, is to expand into those regions. And as a Western project, you may not always have the technical know-how and the expertise to expand into these markets, because these are unique and differentiated and large markets. So you have to do it right. So you need the right kind of partner to expand into those markets. And in many ways, WuBlockchain is also another key partner in that realm. So we rely on these partners to spread the message of Covalent. So that is how that round came up to be.
Yeah. So my last question is, no, actually, I think Covalent is a veteran project. I don't know if that is accurate, but I think you guys both went through both bull and bear markets. So, but the CQT has always been like in let's say lukewarm states. But with the move to your new narratives like AI and EWM, so does the team have any plans to manage the market value of CQT in the future?
Absolutely. I think this is a very important question, because if the price of the project and the price does well, the community does well, and therefore more attention, and therefore just a cycle. It's just like a flywheel. So the entire focus of Covalent over the last couple of years, so the token has been out for 3 years now, but the entire focus for Covalent has been on the product, right? Indexing all these blockchains, partnering up with all these customers, getting enterprise ready, using getting Fidelity, getting all this data, structured data entirely on that, building revenue, go-to-market partners. This is why we're the number one product in this space when it comes to structured data. So there's no question about that. But as a result of that focus on the product, the token and the token go-to-market has been ignored, has been sidestepped. So that is one of the major reasons why the token is underperformed. Starting this year, we have taken a concentrated effort to completely revitalize CQT. So I'm going to drop some alpha leak here. We have to tell you exactly when this date is changing. But we have done a couple of things that has been months in preparation. So we are making big technical, economic, and governance changes to the Covalent network to position itself for growth. So this comes down with a couple of things. First is that we are issuing a new token called CXT. This announcement would come out on Monday. So by the time this podcast is out, the announcement would have been out, the governance post, because of the decentralized protocol. So it's 2 days for the governance would, and then it would be, then the new token would be deployed. So CXT, it's a 1-to-1 ratio. So there's no changes underneath. But because of this new token, which is doubling down on these two narratives and tying all the action in, we've been able to produce more liquidity. So fundamentally, in the crypto industry, most people buy the token on centralized exchanges. That's just the reality. So if you're not on any of the major exchanges, it might as well be like your token does not exist. And today, Covalent, the only tier 1 exchange we're on is OKX, right? There's no Binance, there's no Coinbase. There's not a lot of liquidity. If you look at the daily volumes, that's also quite weak. So with the new token, we have lined up a number of new exchanges to list the token, right? So I'm not going to name any names here, but we've signed all those contracts. So you should stay tuned for that. The second thing is just the retail awareness, right? Because if I talk about structured data, I talk about historical data, I talk about billboards, this is all great for a technical audience, but a retail audience, they need a very simple narrative, right? So here you say structured data for AI, it's super simple, right?
Yeah.
And it's super straightforward. And you have all of you're basically being able to reset, because I think the index and all that stuff is from like 2021, 2022. I don't think it's relevant as much from a narrative perspective. This is still pretty critical infrastructure piece, right? But it's just not a thing these days, and from a narrative perspective. So bring in KOLs to tell our story, right? Doing podcasts like the one we're doing with WuBlockchain is another important aspect. So there's a variety of factors there to improve the liquidity. The third thing is just understanding market makers. Just like how I told you the story about, how we brought Arthur Hayes online, and just like how I told you the story about buying the FTX buybacks. Market makers are also a very opaque piece of the market, and a lot of founders don't actually know how market makers work. So I've gotten into the weeds with the order books and understanding what's going on here. So we've completely changed our market makers, making sure that there's no like discontinuity in the price and so on. So all of these factors, improving liquidity, improving the access, moving the token back to Ethereum, getting more of the token supply locked in the staking contract. Right now it's 22%. We are having 5 more operators join the network. So they should go up to over 30%. So that leads to supply shocks, having the KOLs on board. So we have about 15 KOLs today. We'll expand that set. All of this will have a compounding impact on the price. So trust me, the price and the access to the token is a critical focus for us going forward. I've been just focused on the product because I'm a technologist and it's what I've been doing. I'm really good at the product stuff because that's what I've been doing for over a decade. But now, figuring out this whole like liquidity go to market on the token side, expanding into the APAC region is it's early to say, but this is a major focus for us. So I'm pretty excited about this because not a lot of projects get a second chance, like a second debut, right? So in some ways, we get like a second launch in the life cycle of Covalent. So that's pretty exciting.
Yeah, no doubt. So, do you have any last messages you want to deliver to our audience, or any upcoming exciting like improvements you want to share with us?
So I have 2 pieces I want to share. The first thing on the Covalent side is that the AI stuff is super exciting, right? Some of the founders on my team, some of the senior leadership have been playing with this AI stuff for over 5 years. So, we just like how on the data infrastructure, we have so much inbuilt knowledge. On the AI stuff as well, we have a lot of knowledge. So expect a lot more news, a lot more like light papers and utility, the light clients that we're going to ship so that 10,000 people can access the token, all kinds of things. Really, really exciting stuff coming down the pipe on the AI stuff. So stay tuned for that. The second thing is more on a personal stuff. And, we've gone through these ups and downs, and some of your listeners, it may be their first time through this cycle, right? So yesterday, a lot of the majors, they dropped by 20%. It's quite scary. A lot of people are probably thinking, is the cycle over? Right? Should I like come back in 2029 because the bull market is done? And I would say this is a very healthy correction because I was looking at everything that's going on with the meme coins and all the C-level celebrities coming in with their meme tokens. It was just so messy. It's not the reason I'm in the space here, right? I'm here for very different reasons. So it's actually a very, very healthy correction. And the news that is coming out the rest of the year is extremely bullish for crypto. So the Ethereum ETF, I think it's going to happen next week. There's rumors, very high probability of that happening next week. If you look at the election cycle has basically twisted. The U.S. elections is happening in November. It's kind of twisted to a pro crypto audience, so that's super exciting. If you look at just the ETF, right? So people say, oh, the flows are not as strong. But when the gold ETF was introduced a couple of years ago, the flows happened over 7 years. So 7 years of flows, right? So this is like that's just how these ETFs are. And so just, giving it like few months and say the Bitcoin ETF inflows are done is like a mistake, right? So So the best kind of investment you can make is not on any project or any coin. The best investment you can make is in yourself. So my only message to your listeners is stay strong. This correction is a very healthy correction. My personal opinion is the cycle is not done by any means. Crypto is now mainstream. It's been talked, like Trump talks about this, Biden talks about this. It's very exciting time to be in the space. There's a lot of maturity in the space, like self-hosted wallets, like incredible momentum and progress. And so this correction is actually really healthy because now the people who enter, it's like with real conviction. So there won't be any kind of correction in the next like 6 months or so. So that's what I would say. I would say the next 2 months, it's still going to be pretty choppy because the summer, everyone is like kind of fatigued, kind of tired. They're going on a summer break and so on. But I think it'll come back in September with all the events and just excitement around the elections. So yeah, that's what I want to leave your listeners with.
Yeah. So but we don't give any financial advices, guys. You
Yes,
have got
no,
to, yeah, you have to be responsible for your own action. So
absolutely. So
yeah,
the
there is
only advice I can give you is invest in yourself, right? Invest in
yes,
your knowledge, invest. Yeah. So that will never go wrong. But no financial advice, no investment advice, no tax advice, no relationship advice either.
yeah. But go bullish Covalent if you are a big supporter of the Covalent ecosystem, and I think you have a lot to expect in the future. So
Absolutely. And I dropped some alpha leak here as well. CXT is launching. This podcast is the first podcast I'm doing and talking about CXT. This is super secret. So yeah, excited to get this out.
our honor, actually. Thank you so much for sharing with us so many informations today, and good luck in this cycle. And I will come back anytime if you have got any like updates. We'll come back to share with us. So
Thank you so much, Prince. It's a truly a pleasure getting to share stories I've never shared in public before. I hope this is parts entertaining, parts instructional to your listeners.
okay, thank you, Ganesh. Have a nice day.
Amazing, Prince. Thank you so much for these excellent questions. Please enjoy yourself, and we'll talk soon.
Yeah, bye bye.
Bye.